Hey, good morning. Welcome to the channel. My name is Franco. This is Trading Futures Live. And this is another live stream where I think is when we make real progress, right? Because during the week, we are in a hustle, trading, or doing something else, and we don't have time to actually improve technically, psychologically, etc. Right? So I love these sessions because I do think genuinely that makes me better in trading in other areas of my life. So I think this is the real work. Okay, which by the way, a lot of people are not willing to do. But sorry about this. All right, cool. All right, let's jump right here. So, like I promised, I made a poll during the week and asked the people if they wanted me to trade the ES, which I haven't traded for a long period of time, like a long time that I don't trade the ES, and like the majority of them wanted me to trade the ES and the NQ. But for me to do that, I need to develop a plan, right, that makes me consistent profits and can be adapted to my psychology. Okay, so it was a promise that I made of develop a trading futures strategy for the ES, right, adapted to my own psychology. So the way this session will work is I will try to make a plan, right? That that will give me a strategy for the week, right? And I'm going to test that strategy for the rest of the year, right? And if that strategy is profitable and give me some edge over the market and is adapted to my own psychology, starting January, I will be trading live that strategy. Okay. So we will have the entire month of November and part of December to test this strategy. All right. If we have time, we will finish the trading plan. If not, we will do some time during the week, another live stream just to finish it up. Because there's one thing that I wanted to do in this live stream, and is an exercise created by Mark Douglas that will make you a profitable trader, consistent profitable trader. So how do you become a consistent profitable trader? Only when you are psychologically ready to execute your trading plan, which is profitable because you already tested it. You did the right thing, and executing that plan will make you money consistently, right? That's easier said than done, and it takes a lot of work to become and achieve actually those goals, but it's doable. I am a proof of that, and I want to share with you how to do this exercise and work towards you becoming the trader that you want. Okay, so that will probably take me like 30 minutes. So let's get started here. Okay, so how do you develop a new trading strategy, right? So here's one thing, okay, and you can develop a trading strategy depending on your mindset, your way to see things, and that will be probably a lot different from my way of see things, right? So this is very personal. I will try to adapt what I do in NQ to the ES. Will that be profitable? I don't know. That's why we need to apply trial and errors until the trial and error technique, until we get something that is in good shape, is profitable, and can make us a consistent money. Okay. So here to the left, you have a notepad, and here to the right, you have the daily chart on the ES. And I want to start, actually, let's see if we can find something on the weekly chart, right? So if you see the weekly chart, you can see prices where it actually have some impact in the market. For instance, will you say that this price was very important in the past? And this is I would say, let me put here the all right. I would say this is 36.54. I would say this is a very impactful level, right? Why? We have momentum to the downside and we turn prices to the upside, right? So I want to discover, I want to see what happened here that can give me any clue why prices turned back to the upside, okay? Same thing here. We were coming down, then we managed to hold prices here. So what happened in this point? Okay? Here also. Now, remember, this is the weekly chart. So there's a lot of other time frames that we are going to look at, but I want to see what happened here. Why prices turn so aggressively to the other direction, right? This is me not trying to pick tops and bottoms. This is me trying to understand the behavior, how the markets behaves, okay? And what can happen next time these conditions are met, okay? All right, so since I don't want to just start very far because I just downloaded this month of data, I want to see here what happened. Why in this period of time prices turned back up, right? And I'm gonna be completely frank with you. I'm gonna be biased because I am already seeing what happened, okay? But that's okay. That's just me doing the exercise, okay? I want to put there a hypothesis and try to answer, right? And try to find answers to support that hypothesis, okay? All right, so let's go back down to the daily chart. Oh my God, I don't know why this keep happening to me. All right, transparent. And green. All right. Candle week. Yes. I put dark. And let me save this. Feel free to type in any question. Oh, sorry guys. I didn't catch up with the good morning. Soccernatic MB. All right. Thank you guys. Thank you for being here. So loyal. Okay. Sorry that I got distracted. I didn't read the chat, but I think it's important for me to keep going in this session so we can actually achieve something. Okay. It's gonna be hard to do it in 1 hour. Probably will extend a little bit, but bear with me. Okay. All right. Let me actually save this. Let me save this. Yeah. All right. If you have any question, you just put it there. I will check the chat in a few moments. Okay. All right. So, all right. So, I just want to find in this daily chart like a moment of inflection, like inflection points, right? For instance, I'm gonna focus on this 1, 2, 3 days sideways period, and then it completely take off to the upside right here. Okay, so I'm gonna focus on this. Okay, and I want to go down in time frame. Now, before we continue, I want to show you real quick how do I will go to the volume bar chart. Okay, and there's a very simple math that I do, right? And the way I do this is my edge in the NQ is with the 500 volume bar. Okay, so I want to translate that same 500 volume bar to the ES. How do I do that? So I take the NQ volume average, right? And I create a factor for those 500 volume bars. So I said, if this 500 volume bar works for X, and that X is the daily volume for the NQ. Now, I get the daily volume average for the ES, and I want to know how much is that, right? So the way I do this is a simple math. So I will multiply the volume average for the ES, which is 22,887.95, right? Times 500, and I divide it by the NQ volume. And the NQ volume right now is 769,485. And I'll get the magic number. So the magic number is 1487, right? 1,487. So I will just round up to the 1500 volume bar, okay? It's actually 3 times, and it makes sense because the ES has 3 times the volume in average of the NQ, okay? So that's just a parenthesis, and I want to put here, before I start, I'm going to put a note here. Volume chart is 1500. 1500. It's fine. Just put it there as a note so we don't forget. Okay. So what I'm looking for, okay? I want to look for this type of formation, and I will just focus myself looking at this picture in different time frames, okay? Until we get down to the 1500 bar, 1500 volume bar, okay? So the way it works is, you guys know, since I'm looking for longs, right? I'm looking for longs right here. If we look for shorts right here, we can go and do the same thing for the shorts right here, because we were going up and then we start to drop from this area, okay? But let's focus on this period of time, okay? All right, so the way it works is I want to see a rally, right? Let me put an arrow. Rally, some basing candles, right? Another rally, some candle retesting the area, and then the push to the upside, right? This is what I'm looking for, right? In all the time frames in this area, I want to look for these formations, okay? Until we get to the 500 volume bar, okay? All right, so do we have something of a sort on the daily? Well, we don't have the rally-based rally per se, because we don't have a rally right here, okay? But if we go to the 4 hours, and the way I like to do, multiple time frame analysis is I divide every time frame by 6, okay? So if I divide this by 6, it'll be approximately 4 hours. We know we have 23 hours, but if you round up, it'll be, and let's put here like 21 days. Doesn't matter because, all right, so there you go. You have, right, this rally, this sort of a base, and then a very small rally, okay, and a retest. How do I say this is a base? Well, you have this very long wick, okay, the wick. Now remember, this is the 4 hours chart. So a lot of time frames that we can go down and check what's going on here. So for now, I want to check what happened here, right? Do I want to go up in time frame? Actually, we don't have. We have this rally, base rally, and then this retest. Okay, but this retest was actually very deep inside the zone. Okay, so I like to see something more like this kind of tests. Okay, now can we go down in time frame because we don't find something like there is very meaningful here? Actually, we do. Actually, we have this. This is a drop base rally, base, and another rally, and I want to see this. This actually didn't get to the area. Okay, so let's focus in this. So what time was this created? Market. This closed at 2, so this is the higher volume candle for the day. Okay, remember, I'm not watching volume at all right now. I already know what's the 4-hour candle that has more volume, right? Which one is it? Is the one between 10 in the morning and 2 in the afternoon. Yes, the first candle of 4 hours closes at 10 in the morning, but that candle has 3 hours overnight, meaning pre-market, and 30 minutes only within the trading session, which is the 9:30 to 10. So that's not the highest 4-hour candle. The highest volume for the 4-hour candle chart is not there. So the one that has more volume is the between 10 in the morning to 2 in the afternoon. So I know this is a very good area, right? Regarding the volume. Now we will put, if we have time, we will put horizontal volume. Okay, let's go down in time frame 4 by 6. So it'll put us in the 40 minutes. Okay, now I'm translating whatever I do on the NQ to the ES. You don't have to do that. If you have an edge, you can start with that, or you can just create a hypothesis and say, all right, instead of the 40, I wanna do 30 or 25 or 21. It's up to you. Like I like doing these steps in order. I think it has worked for me in the past. All right, let's keep going. All right, so within this area, 40 minutes, do we have this do we have the picture that we're looking for? Rally, base, rally, and some retest. Okay, so we do have this. We have this rally, this base, and this rally, and then this is testing the base. Do you guys see? Right here. And for now, I'm just going to include the legging. There you go. Now, we see how this one is actually the one that probably put the some buying pressure. Do we have the retest here? We don't. You guys see how we didn't have the retest right here? It came very close, but we know this one came here. So I'm gonna put this, and I'm gonna mark. I know this one created some push to the upside, but here actually the retracement didn't come back to the area. So I want to know why it didn't come back to the area. So do I have something to work with here? Actually, we don't. What do we do? What do we do? We keep going down in price, in time frame, till we find the picture that we want. Okay? From 40, I like to go to the 7-minute. That doesn't mean it's going to work on the ES. I just do this on the NQ. I want to start doing this, right? I can always tweak until I find the real edge. And I say, all right, why this thing does not show in the 7-minute? There we go. So actually in the 7-minute, you do have the area, right? Actually in the 7-minute, you do have the area. So since we found this on the 40, we narrow it down to the 7-minute, and then we have here a bunch of bases. It could be this rally, bunch of bases, and a rally to the upside, right? And this retest to this base, right? Actually here, you have the same picture, right? You have the rally, the base, another rally, and then you have this retest. Where is this retest? And you mark off the week, the week that actually the retest is testing. Which one is it? Is this one, right? You guys get it? This week right here? That's my zone. All right, that is my zone. Just feel free to type in the chat if you're following me. If you don't, because this is a very important point for me. Okay, this is where I start seeing in low time frame where my trade can be. Okay, so I start putting the proximal line. That's the first line, and then I raise the entire area. Okay, this entire candle. What time is this? 1:43 in the afternoon. Is that the best time for me to trade? Actually not, right? And then we will see in a couple minutes, just like in few minutes, where I want to find the area. But here, actually, you have in the 7-minute, right? Actually, you have this rally, a bunch of bases, right? Another rally, and then a comeback to the price, touching this area, and a explosive move outside the area. So what is the mechanics of this? Why this thing is just exploding to the upside? Few reasons, but the truth is that I don't know, right? Yes, MB, let's keep doing this, and I'll show you how I know that's the area, okay? How I know that's the area. Remember, I use the dollar. We haven't talked about the dollar. We haven't talked about the internals. We haven't talked about location. We haven't talked about momentum. There's a bunch of parts that makes me think this is the area, okay? Not only one thing. And I think that's good, because the more thing you have and the more conditions are meeting, the more confident you can be, okay? A breakout pullback continuation. Isn't that just a breakout pullback continuation? I'll tell you what the overnight is. So this is the overnight. No, this is actually the previous day. Okay, so the overnight is right here. Yes, so this will be for me the pullback continuation setup right here, but we haven't seen this yet, okay? We're watching from the 4 hours. We're watching from the 4 hours till the lowest time frame, so we can find an edge. We can find a zone where to trade from, okay? All right, so we do have this area right here. So the idea, the hypothesis that I have made along these years is, all right, so few things. A bunch of orders just come into the market, and sellers are here active, let's say in this area, right? A lot of sellers are active and they're trying to fill their orders. But let's say here you have, I don't know, 1,000 orders, 1,000 contracts. But here you have an overwhelming amount of orders. I don't know, 25,000. Okay? Now this guy is just trying to fill his orders right here, right? Every time it comes here, it takes 5. Every time it comes here, it takes 2. And then at the end of the day, these 25 orders became, right after this pullback, it has 15,000, right? Out of this original 25,000, now they're left 15,000. Okay. Market makers start seeing these orders, and they start to they try to take advantage of this, selling here and buy, and for this guy to buy right here. Okay, so this creates a momentum to the upside, right? A lot of orders and the sellers running out of these orders. So these 1,000 orders are gone. There's no more sell orders right here. There's marginal orders, like retail traders trying to short this thing, or just other people selling very low amount of contracts, and then prices shoot up until it finds another seller. So this seller is right here selling, I don't know, probably 500 orders, right? And these amounts are hypothetical. I don't know them. I figure you can see with the order book and the vertical volume, the icebergs and stuff, but that's very subjective because they can put the order in and then take it out, and they can play with you, right? Yes, so I am identifying this. This is the 7 minute, okay? This is the 7 minute. So do I trade off of the 7 minute? Do you guys know that I don't trade off of the 7 minute? But I started with the daily, right? Then I go to the 4 hours. Then I go for to the 40 minutes or 30 minutes, whatever you want. And then you are dissecting. You are creating a lower risk every time you go down in time frame. How do you create a lower risk? Where you remember that we start off with this entire area, probably like 20, 30 points, right? But you don't want to risk 30 points. You want to risk 5 points, 7 points, depending on your level of risk, right? Now, here's the important part. If you're a day trader, you need to have profit potential for the trade to work during the day, right? If you are risking, let's say 40 points in the ES, how realistic is for you to hit 2-to-1? Meaning having an 80-point trade in the ES. Is that realistic? Not at all, right? So you will have to keep the position more than one day for it to hit your target. That's not what I want. I want my target to get hit in few hours, in 30 minutes, in few minutes, etc. Right? That's why you use multiple time frames and you compress your risk, right? All right. So let's keep going here. Okay. So you have this, right? This is what I call deformation. Deformation. I call it explosive accumulation. Okay, so you have some movement to the upside, and then you encounter a seller, and then the buyer is just filling his orders, whatever, if it's a computer, until the seller runs out of steam, and then this buyer just pushes price up. Okay, This is the formation that I call explosive accumulation. All right, so I want to go fast forward and see, oh, if now this is on hindsight, right? We know this is intentionally I was choosing this one. Now, I want to prove my hypothesis right. I want to go to the dollar. I want to go to the internals. I want to go to every other auto enhancers that I use to validate this zone, right? All right, so we know here, we came back, we spent some time here, and then we move in a very aggressive manner to the upside, okay? That's our trade. Let's check the risk and reward ratio on this one. So you have this stop right here, 3-to-1 minimum, right? This is 3.2, but 3.1 is fine. So this trade is valid, right? All right, what do I do next? So what do I do next? Again, this is 42 to 33, still too large of a zone. I want to go down in time frame. Now, if you go to the 1 minute, you could use the 1 minute, but I want the noise. I want this same picture on the share bars, right? So I go here, volume bar, and we already know is 1500. So I want to go down, right? It's going to be a challenge here. There you go. There you go. There you go. So we do find the same picture. Now, if you go to the lower time frame, you will notice here. All right. So we know is this entire area, right? So I'm gonna get rid of this and put a circle so we know which one is the one that we want to check, right? And this comes the concept of freshness. What is freshness? You guys know, right? I talk about this every day. Freshness is I want the rally, some base, some rally, and the retest, and then boom, right? I don't want this. I don't want this. Okay? I don't want this. Why is this? Because every time, remember the concept of the 25,000 contract buyer, right? The 25,000 contract buyer, he is feeling 5,000 every time. 5,000 every time. 5,000 every time, right? The next time, he's probably gone. And prices could just blow through it, okay? So I want to find something in the lower time frame that is actually fresh. Meaning, all right, his order was 25,000. Now he has 17,000 left. All right, not 2,000, not 1,000. So how do you know that? You don't. So the way you treat this thing is, all right, I want just the first doge. Okay. After that, not anymore. Gone. See you later. We find another one. Okay. So actually, you have this one. Right? Actually, you have this one. This is the original. Right? Rally, a bunch of bases. A explosive move, a comeback. Actually, you include this one. Right? So this is what validates your trade. And then it comes here, and then it feels every time it comes back to this level, there are less orders, right? You know, this is the level that you want to trade from, right? So what you do is, all right, so this part of the area on the 7 minute is already gone. The orders are not here. That's my interpretation, right? So what I do is within the area, we know is this one, this entire area. I want to know I want to see where this part of the zone can be fresh. And I see this one. Rally, base, rally, and another retest right here. Okay? So I mark off this one. Okay? And I do find this one too. You guys see? This is actually a rally. Not an explosive move, but a bunch of retest. This one is actually gone. So what I want to know is what happened here. All right? Which one of these 3 pictures is the best one? And it worked already. Okay? This is not subjective. It's a bit subjective, but it's in hindsight. So you already know that these areas are going to work. Which one, right? Which one is it that is going to work? Right? Let's go back and see which one was the one working. All right? You see it. So this one, you already have a bunch of tests. 1, 2, 3, 4. Right? Prices flew like prices like blew this level in no time. You guys see? All right, so I'll tell you, Edgars. I'll tell you why. Because I want the noise, okay? I do want the noise. I do want this bunch of movements. If you go to the 1 minute, you might not get it. I'll show you. So let's put a circle right here. Let's put a circle right here. Oh, daily. Oh my God. 1 minute. I can't believe this. I really can't. Oh my God. I don't know why this keeps freaking out of body. It's I don't know why this continue to happen. I save everything and still reset minutes save. Let me save the workspace again. God damn it, every time I change time frames. All right, so let's go down to where our area is, okay? Where is it? Not even this one, right? Oh yeah, here. So look at the difference. Let's see the difference. I like the volume because it's very noisy. Okay? All right, so here you actually have the picture, okay? But if you see here, like time-based chart is just a cut in time. Cut in time, like from 1 minute to another, just cut in time. Whereas in the volume bar, you can actually see where the accumulation of orders is. Now, if you show me the volume bar in this period, you will see obviously how many contracts were trading here. Okay, whereas in this one, you just know that from here to here, right? You don't know how many contracts were inside this candle. You just know that from here to here just happened 1 minute. Okay, that's the only difference. That is the only difference. Okay, actually you have here the picture. It's not like I would say, like, if you like to put this in a better spot, it'll be like this, and from here, you see, like the rally, a bunch of bases, not even a leg out, but you have this test here, or probably you will put this. That's why it's just cut in time. I find the volume chart to give me better shapes. That's the only way. That's the only thing. But it's personal preference. Like I do prefer that. You can use, if you find the edge on the 1 minute, I'm not gonna tell you that doesn't work. It could actually work. I just happen to prefer the volume chart because it has more noise, right? So do you guys see? This will be, let's see if this one actually, you don't have, here the thing is you don't have a leg out. You see that? You don't have the leg out. This one came to the upside but immediately rejected to the downside. Whereas in the volume chart, you do have a leg out, a candle to the upside and then a retracement. But it's just, it could be a coincidence. Like, I don't know. It's first time I see the 1 minute in this level. I didn't prepare for this. I'm just doing it, as we go. Okay. Let's do the 1500 again. Oh, thanks God. This. All right, but Stack. Good morning, welcome. All right, so you see how here in the volume bar you have a leg out. That probably would have been different, but in this case we do have a solid leg out. Okay, not in the 1 minute. That doesn't mean in the 1 minute you will never have a leg out. It's just coincidence, I think. And you see here, all right, let me get rid of this one. We know this one didn't work. This one didn't work, so it was this one, right? Do you see how this one, do you have here this level? You have this this is the 1 minute sideways, right? You have 1, 2, 3, 4, 5, 6, 7. This is accumulation of orders, and then something happened here that prices went to another level, right? Either the seller ran out of steam or the buyer just pushed the pedal down, okay? To just, okay, buy me in, okay? We don't know. But the explosion to the upside is what you care about. How aggressive prices moved out of the zone. And after this level, prices never came back. See that? Buyers were active in this level enough, so prices never came back. All right? So you know this is one zone that you need to pay attention to. Then prices came back down, right? This is actually overnight. Okay? And then after this level, boom, explosion to the upside. Let's see, we never came back to this level. Okay, so overnight. Those are the best ones, right? Now we don't trade overnight. We try to find this same picture within the trading hours, okay? All right, so let's see. We already, this is just one setup out of hundreds, okay? So we cannot rely on just one setup, okay? This is a, how do you call, trial and error type of, it's a trial and error thing, so you can develop actually a data that will tell you, all right, if this happens, then I'll execute this way. So start with daily chart and find inflection points where prices turn direction, right? That's how you develop a trading. Okay, this is not me. This is not, like I said at the beginning, this is not me trying to pick tops and bottom. I just want to know what happened there. I'm in hindsight. So I can put a plan together and try to test it real time. All right. Start with a daily. And let's put a star here. And what time is it? Wow, time flies. Multiple time frame analysis. And then here, divide by 6 each time. All right, so you got here 4 hours. And then you have 40. And then you have 7. And then you have 1500 volt. Well, that's for me, right? Like I said, if you are like, this is another thing that we could do, but not today. We're not gonna have time, but you should do. We can put here just RTH, regular trading hours, right? And there are 6.5 hours for the regular trading hours, right? From 9:30 to 4. If you divide that by 6, it'll be approximately 60 minutes, right? And then the 60 minutes, you divide it by 6 again. And then you have the 10 minutes, right? What's the difference? There's no difference. As a matter of fact, we could do the exercise. But here's the thing. If you have 6.5 hours for the regular trading hours, the last 1 hour candle is going to be 30 minutes. It's not going to be 1 hour, right? So instead of me doing the 30 minutes, I will just do the 30 minutes, right? The 30 minutes will give me 13 candles, right? Like each candle, 30 minutes for the entire session. Now, if you divide the 30 minutes by 6, then you will have the 5 minutes, right? And then I know MB, you like the 5 minutes. And you can find, if you exclude the Globex session, and you just put the regular trading hours, then you can find something in the 5 minutes. I do agree with that, right? And if you divide the 5 minutes by 6, you will have something like 45 seconds or something. But I would rather at that point go to the volume chart, okay? I just do the 4 hour, 40, and 7, including the Globex, okay? Because a lot of turnarounds happen overnight. I don't trade overnight zones like blindly, like limit orders in overnight, especially if it's a sell. If it's a sell area, that's completely a no for me. If it's a buy area, that might be, but a sell area, that's a recipe for disaster for me. All right, multiple time frame analysis, 4 hour, 40 minutes, M7, 15 volume. Okay. All right, find the shape that you are looking for. For me is rally, base rally with retest. Let me know if you guys follow me, okay? If you are stuck in some part, just let me know. Retest freshness, okay? If you guys don't know what is freshness, I just want one retest. Like this is fresh. If you see the chart from here, if you see the chart from here, this is fresh. This is fresh. This is not fresh anymore. Okay, it's not fresh. Actually, you see how it's easy to just mess up here. You want to see the best, like the retest has to be barely there, like few ticks, or either not a few ticks. I would say, like, let me retract from that. Not few ticks is the best condition, right? So what would you say that like buyers were more likely to buy at this level or at this level? Look at this. When it came to this level, immediately rejected it. You guys see from here, immediately rejected prices, right? You gotta look for the most delicate touch. That's it sounds weird, but the less time it spends here, the stronger the area. Okay, you guys see here it came back. You actually see this is from, look at the time. This is 1:44:36, and this one closed 40 seconds later here. So it actually, probably if we go lower in volume candle, you can see like probably 10 to 15 seconds spent here. Okay, that's what are you looking for. Very little time. Like here, actually, who knows? We got to go to a lower volume chart to see how much time spent here. But just the wick came here and boom, immediately rejected it. Okay, so this is a very good area up to this point, right? Up to this point. You cannot marry these areas. Okay, it's just once. Okay, one and you come, and one, and when it comes back, then yes. But after this, next touch, it's gonna be harder for you. Okay. Now, this would have been a break-even trade for me, right? What is this? Probably 3-1. Barely touched it. Okay. But after we moved 1-to-1, you have a rule, right? This is all what is suitable for you. For me, the 1-to-1 and move the stop works. But look at this. It came back a few times. After you're in the trade, there's nothing you can do. You're just in the trade, okay? All right, so it worked this time. Next time, there's no freshness in this thing, okay? Is not. I mean, up to this point is fresh. Soccernatic. You see that? Up to this point is fresh. Now, after this, it's not fresh. Give me 1 second. All right. All right. So I don't want to lose my idea here. Okay. So up till now, we do have rally-based rally, with retest and freshness. Okay. Now, this is in hindsight. I want to see where the dollar was. Okay, at this time. Remember, this is an overnight. This is an overnight, and I haven't checked it. I'm gonna be truthful with you. I haven't checked this, right? This is just one setup. We have to find a few of them and try them on sim trading, right? Trial and error, remember. All right, so this is the dollar 140 in the afternoon. This was, when was this? Let's go to the 7 minutes so we have a bigger picture here. All right, let's get rid of this one. and just see what happened here. All right, let's bring the dollar. Yeah, I don't think freshness is actually a word, but I don't know. I was taught that way. All right, so I'm gonna simplify the analysis on the dollar so we can move on. But the idea is, and you apply this same principle for the dollar, right? You apply the same principle. Rally base rally retest, rally base rally retest. Higher time frame go down to a lower time frame. Now the dollar market is humongous. There's no volume chart on the dollar. That's why I like to see the lowest time frame I see on the dollar is 5 minutes, and that helps me with timing on the regular trading session. Okay, is that very precise? Is precise? Is not. The 1 minute is the chart is very distorted because the dollar can spend in one level a few minutes and then it's not clear for me. So, but if you could find something lower than 5 minutes, I think it's good, right? I think 5 minutes for me it's ideal. After been trading for with this strategy probably like 1.5 years, probably 2 years. All right, so let's put the dollar here. And this happened. Let me see. I'm gonna try to find it here. Okay. Let me get rid of this. So I think. Show side panel. All right, so this is the one that I wanted. There we go. Actually, I have a bunch of drawings here, but all right. So this happened on the. This was October 20th, October 21st, right? So this was October 21st. So October 21st was this one, right? Right here. So if you guys see here, October 21st, we were on the overnight, we were on like losing a little bit of steam, like on negative, and then after I figure we had some news here probably, but I don't care about that right now, and we went to the upside. So the dollar was going up, right? And then it hit this supply, and then it started to reverse to the downside. Okay. All right, so what time was this? 1:43. So we go here on 1:43. Let's go lower time frame. Let's say 30 minutes. And was here 1:43. All right, so it's around this period, okay? This level. So I want to put a circle right here. what happened here? So actually the dollar came to this level, right, and started to reject to the downside. So we know this. We go down in 5 minutes, right? Remember, what's my edge on the I would assume that the dollar is in supply, the markets are in demand. Okay, I just wanted to prove that hypothesis true. Sorry, I want to prove that hypothesis true. So do I will I choose this area for me to trade from? No, but I just want to correlate what I'm thinking to what happened. Okay, so if you see this, right, let me put here alt F Fibonacci. There you go. Right, so this was 1220 was when was 1220? 1220. There you go. So you have here one time touch in this level, came back down, right? And the ES created this rally-based rally retest and explosive move to the upside. So for now, it's been proven. Okay. Supply, the dollar came back down, and then again in the supply, 2 in the afternoon. What happened here in 2 in the afternoon? 2 in the afternoon. There you go. 2 in the afternoon. Again, supply right here. The dollar spent from 2 in the afternoon till 2:25. 2 in the afternoon is right here. F7, 2 in the afternoon. All right, let me get rid of these lines. 2 in the afternoon, 2:25, right here. So 2:25 is when this level was created, 2:25, and then explosive move down on the dollar, explosive move up on the ES. Do you guys follow me? I know it's probably hard to see it the first time, but you will get accustomed to this. I want you to follow this because the dollar correlates perfectly on the ES too. Okay, so again, it came here 2 in the afternoon and it moved down 2:25 was the last. So it came here to 2 in the afternoon, right? And from 2:25 right here was the low point, right? Do you see that? Dollar started to move down. Market was sideways until we had an explosive move to the upside. Okay, so I would say the dollar pretty much correlates with the opposite direction on the ES. Now I want to see where the dollar was when my trade was on, right? Let's suppose this is true. I was trading at 3 in the morning. Doesn't matter. I just want to find if this level was the same level, okay? So this is 4 in the morning from 4:20 till 4:50. 4:20, 4:50. So this is 7. This is midnight. And there you go. 4:20. 4:20 right here. 4:20. Where is 4:20? Is the dollar within the supply? Yes, it is in the supply. The market came to demand. The dollar is still in supply. Doesn't matter, right? Dollar still in supply. And the market was just going up, okay? Remember, the dollar in direction is not correlated 100%, right? Actually, let's do that. MRCI futures correlation, right? This session might take us a little bit longer. So we can just actually have something there. Yes, the dollar has negative correlation, but it's not 100%, right? Especially in commodities, there is seasonality involved, right? Seasonalities for different commodities, like precious metal, like gold and silver, they trend in seasons, right? Crude oil trend in seasons, cattle, etc. Cattle, other metals, copper, they all have seasonality involved. So they're priced in dollars. They have inversely correlation, right? They have inverse correlation, sorry. But the one that I want to pay attention here is the ES and the DXY. So the ES and the DXY is right here. I know probably you're not familiar with this chart, but I've shown it before in these live streams. This is actually hard data. This is not made by me. This is a MRCI online. MRCI.com is a pretty helpful resource and is free. If you want some more deeper data, but for me, there's no need. You can make a free trial and try to dissect that data, and it'll work for some time because seasonality, correlations, they don't work, they don't change overnight, okay? Now, is the dollar always inversely correlated? Not really. It can change, and you can see here how if you change 30 days, 60 days, 90 days, 120 days, and 180 days, it can change. So you have here the ES, you follow me? The ES. And if you go all the way through the DXY, it's right here, minus 80%. You guys see? Minus 80%. It's not minus 100%, right? And here is the proof. Here is the proof. The dollar is in supply, but still moving up. And the market came to the demand, and it shot right out of the demand to the upside, okay? So the way I see this is not that, yes, inverse correlation, negative correlation is the same. The why Socratic is because instead of using indicators that are lagging, right? Let's say you put here the RSI, okay? You put here the RSI, and if you're waiting for the crossover on the RSI right here, probably prices are up here. Which one is a better entry? This one or this one? If you put any other, like moving averages, all the indicators lag in price. Why? Because by definition, they derive from price, right? They derive from price, from price. So if something is deriving from price, you need more time in price here, right? So your indicator will give you the signal. So you will not get the right entry. You probably will have the signal right here, and you will say, "Oh, look, this is a very good entry." Right? This is a very good entry. But guess what? Price blew through it. Why? Because it's not the very good entry. Right? Just one example. That this could have worked, and we'll see in a few minutes when we go to the trading in the zone. What is your mindset? What is the mindset that you need to trade a good trading system? Okay, so the idea here is, all right, the dollar is in supply, right? I will just look for longs, period. Why? Because even if the dollar is going higher, but it's within a zone that I think it's a good zone for the dollar to drop, this up in price, that might be a seller attracting prices as a vacuum. Remember that the dollar is a very vast market, and there's no volume in this chart, right? So you don't know if this is buyers just pushing in prices or sellers just attracting levels, right? So they can sell. Remember, big orders, they function as a magnet, attracting price. All right, so that's the idea. So what is going on with indicators? There's nothing wrong with indicators. The only thing with indicators is that they are lagging. They didn't give me an edge to me, right? That doesn't mean it cannot give you an edge to you. Like it could, but for my trading system, my trading psychology, they didn't work. If you find an edge with an indicator, it's fine. You can trade any system, right? So why I use a dollar? It's real time, right? There's no lagging, right? And it's actually showing me that is inversely correlated here, right? So can I find an edge to in the dollar to enhance my trading? Yes, absolutely, right? Could I trade without the dollar? Absolutely yes. Now I want more things to tell me that my trades will work, right? If you see the NQ with the DXY, DXY is minus 80, right? Remember, 0 here is non-correlation, right? The closer you are to the 100, the 100 is the more correlated, more correlation you will find. If it's a negative 100 is inversely correlated, right? 100%. Like if you see here, the ES and the NQ, they correlate 99%, not 100. They move a little bit different. Let's see the 30-day correlation here. Look how different is this. On a day-to-day basis, they could or they could not move in the same direction. I want to see the YM and the NQ. Look at this. Just 51%. YM and the NQ. And we have seen it in the chart. We have seen it. The Dow has been a lot more bullish than the NQ, right? The closer this thing is to 0, they're less correlated. Like for instance, you find here that gold and the Nikkei is just 0.08% correlated, right? That means that this thing does not correlate at all. 0, none, nada. Okay? Now, if you want to diversify, you want 10 to 15 things that are that are not correlated. So they're closer to 0. Then you will have a balanced portfolio, right? But that's another topic. Okay? Now, in this video, I'm just trying to find an edge with my trading. Okay? And I use these numbers. Feel free to type in questions, okay? All right. Let's keep going. So that's the dollar. So we know that the dollar must be in supply. Let me put here. We already know. In this example, DXY must be in supply or demand areas by the time of execution. Areas. Same principle for the DXY. Multiple time frame analysis. I like actually daily. That's my personal preferation, but that's my personal choice. But you can do anything. Like, and here on the 3 hours, the 30-minute, and the 5 minutes. All right, that's where I find my areas on the dollar. I understand the 5-minute areas are big, like the one that we had here, but that's the best I have found in the dollar. 5 minutes. If you have another one, that's fine. All right. All right. What's the next step? Do you guys, Sucker? You have traded with me probably for 2 months. Why do you think I look at later after the dollar? Where's another thing if you're here? Anyone that could say what else do I look at? What's another enhancer that I use? The 10-year yield? Yes. But I don't use it for intraday. I use it mostly for the yields. I use it for the market context for the day. That tells me, all right, we might have a long day or a short day, right? That's not what I'm looking at. Yes, Ashley, there you go. The TQ, the ADD, right? So I want to go to the internals, right? I want to do the 21st. And I want to remember, I am not going to see real time. This is all in hindsight, okay? But it's okay. It's okay. Well, actually, I cannot, I will not find anything because this order was filled overnight. All right. Anyway, I want to see the rest of the day, right? Let's say this was the order, and now we are just trying to find an edge to get in during the trading session, right? This is 7 minutes, so we do have. I'm gonna be very fast, just trying to do this. All right. Let's do this. 7 minute right here. Just because I want to find something that I can trade. Okay, there you go. Look at this. It came so close. So we have this. If we put it here, we have the rally-based rally, a bunch of tests. Let's put this one. Okay. I know this is cheating, but that's how you develop a trading plan. You know, this one has a shape, and then it came back here. Oh, actually came back in the next day. So no, I want something like this. I want something like this, right? Here, just because all right, so rally-based rally. We don't have the retest here. Let's do this one. That's fine. Okay. What time was this? Oh, this is all overnight. Damn. All right, let's see if we can find something here. There you go. Just wanted to see the internals, how the internals behave. Okay, let's go to the 15. There we go. All right, so let's do this. This is 4. What time is this? 4 in the morning. 5. 8:30. 9. All right, here. There we go. So you have this, right? Internals are the tick chart and the ADD. Advanced decline, you can Google them. Like I won't have time in this live stream to explain that to you. Google advanced decline line and the tick chart, TICK, for the S&P 500. Okay. So you have the same similar picture, right? You have this is the open rally base, a bunch of bases, a rally, and then like an explosive accumulation right here, boom, and then exploded out. Then we came back here. No, we came close here. So let's see if we can actually cheat here. No, we don't have any, but let's use this just to try to understand how the market internals work. Okay, so here actually you have this one, but yeah, I blew through it. Okay. So this was 10/12. Okay, 10/12 that day. This is October 21st, I think. Yes. Oh no, this is October 28th. This was yesterday. So here's the one that I wanted. Yeah, but nothing is like regular trading hours. Everything was. This is overnight. All is overnight. So I can't find something here. Yeah, I will try to. October 21st. All right. What date is this? 24th. And the 24th, it came here in the morning. All right, let's do this one. 15. All right, so we know we have this entry at 1 in the afternoon. We want to see the internals, how they were here. Okay, do we have the picture right here? Actually, we do. We do have this rally, base, and the retest, and then this explosive move. Now, this is me cheating. I just want to see how the internals were behaving here. So you have this, and then it came to fill you in, and then explosive move to the other. Okay, cool. All right, so this is October 24th. All right, let's go to the internals, put October 24th. No, if you Google, don't call yourself moron, bro. Stack. Just learn from your mistakes, brother. You don't have to be so harsh to yourself. Like, there's zero value from hurting yourself. Zero. You won't become better if you hurt yourself. The other way around. You will. It'll be worse for you. Okay? That's my own experience. So just don't do that. Try to get better, period. MRCI, Trader Andre, you don't need to become a member of MRCI. They have bunch of other strategies, spreads and stuff if you want to become a member. They have a free 14 days. No, you pay the $49. I did it like a few weeks ago just to demonstrate the website. If you want to go to my live stream in the past few weeks, I actually paid the $49 and then I canceled it. So they refund me. They gave me my money back for $49. It's 14 days free. But actually, you don't need. If you Google MRCI futures correlation, this is what Google will give you. Okay? It's free. It's completely free. And actually, you don't need this chart every day. It doesn't change every day, right? So you can just glance at every week, every other week. Remember, I use the 180 days. Okay? Why? Because 180 days, all the markets are more correlated, okay? But you can actually go down in days. All right, let's keep going here. Oh my God. We're gonna, in a few minutes, we're gonna talk about that. This is what you need, Stack. This is what you need. You need to eat this book. You need to digest it. You need to reread it. You need to memorize it. You need to do everything. You need to you need to actually become this book. Okay? It has a lot of value. I think it can help you. All right, let's keep moving here real quick. So this is 28th. This is taking very long time, but I think it's worth the time. So this is the 24th. All right, 24th. And this is the 24th. There you go. So I have it here. And the time of the fill was 1:22. 1:22 in the afternoon. 1:22. There you go. Actually 1:23. All right. All right, so this was created at 1:23. Just let me make sure we have the right dates, so we are not looking to a different chart. No, 24, and here, this one, 25, 24. All right, there you go. So, all right. So what are the things that I use? So here, so I have very limited space here for the tick chart, right? But here, the time of the fill is 13, meaning 1 in the afternoon with 21:35, right? If you go here to the 22, right? You can find this. Although this thing was making new lows, right? tick chart was not making a new low, right? It was close to the minus 1000 that tells you exhaustion levels. This is a cyclical chart, okay? It comes to an exhaustion level and then it bounces back up. That doesn't mean that when it bounces back up, prices are gonna bounce back up by any means. Just, it's like a breath indicator, okay? Just bounces, right? Till it gets more order and keeps going down or keeps going up. So this is a cyclical chart. See that? It goes from like a good extreme on the ES is plus 1000. A good extreme on the ES is minus 1000, right? There is a different ways to read this chart. I like to find divergence, right, to enhance my trading. So how do I find divergence? Meaning, if I want to go long, I want to find a divergence to the upside. How do I find that? What is the market doing when it's coming down? What is the market doing when it's coming down? It's creating new lows, right? So every time it creates a new low, you know the market is going down. It creates a high, right? Creates a new low, and then it creates a lower high, and then it creates a lower low. That's how you see the markets going down, right? It's pretty straightforward, right? All here know that, right? Comes down, new low, it creates a new high, like a lower high, then it creates a new lower low, and then creates a lower high, and then it creates a new low, right? If this chart is coherent with this movement, we can. It's not always a truth. It's not always true. But if this thing is consistently doing that, we can assume that market probably will continue to go down, right? But what happens if this is to minus 1000? We know this is an exhaustion level, right? It comes to a minus 1000 and it bounces back up. Next time to go to minus 1000, it'll need momentum, right? So this is a momentum indicator. So if it goes below this level, so we know that the momentum continues. Whereas if you see that the market is coming down, but this thing is not, so momentum is losing steam, right? So why do you need a losing steam momentum? My trading strategy needs prices to come against me when I'm trading, okay? Meaning, if you think my trading strategy is anything but common among traders, is not. So I want prices to come against me, right? So I can buy in a good level, and then prices just reject from that level, right? It's not common. The majority of traders there are just waiting for this movement, right? And then they go in around here, okay? When prices are already moved out of the zone, which is fine. I happen to feel more comfortable trading this way, right? You can adapt whatever I'm talking about here to your own mindset, all right? So we know here that we created a low, right? That we created a low right here. So this low is 1302, meaning 1 in the afternoon and 2 minutes. 1 in the afternoon and 2 minutes is here. So this is the low that you created here on the tick chart, right? Extreme low. At this point, you are creating a new low. You see that? Low here, higher low, higher high, lower low. Lower high, lower low. Higher high, because we went through this, lower low, right? So this is the extreme. At this point, you haven't seen this chart. You haven't seen it. See that? But you are starting to create divergence. Now, I would assume that you already have this area drawn in your chart. Because that's one part that is key. Okay? Is there more indecision like bears versus bulls with long red or no? Not really. No, I don't pay attention. If this was like a huge rejection to the downside, and no, I just see levels here. There could be something there, but I don't see it. Okay. I know there are traders that they see how fast this move or how much time it is spent below or above or below the zero line. I just like to see a divergence, right? And exhaustion, meaning if I'm shorting, I want to close. If I'm shorting, I don't want this thing here because I know it's going sooner or later is going to go to the upside because it's cyclical, right? If I'm shorting, I want this thing close to the plus 1,000, right? And is hard to digest this because if this thing is coming down, right? How do you think you're gonna buy here, right? You think this thing is gonna continue lower, but actually don't, right? It's gonna breathe to the upside. Okay, so here's the deal. So you have this low here on the tick chart. You have this extreme close to the minus 1,000 and immediately rejected to the upside. Zero line here, it continues to go lower. Now it goes lower. It creates this low. This low is a 1312. 1312 right here. You see that? New low here on the you see that? This is the previous low on the tick chart. Now you have a new low on the equity markets. But guess what? Tick chart didn't create a new low. See that? From here, it reversed to the upside, close to a zero line, continue dropping, right? At this time, prices are approaching your zone. This is what you want to start seeing, okay? You want to start seeing some divergence. Look at this. Do you guys follow me? Do you see how this created a new low and then immediately rejected to the upside? That's where you want to see it. All right. Now you're ready here to put your order, right? Now you can treat this thing different ways. If you feel like, damn, I just want this thing to go inside my zone and I'll put the order here coming out of the zone. Or if you are like a more experienced trader, you want to put a limit order right here and then just wait for it. Wait for the limit order to get filled and just have a plan around it. If it works, fine. If it doesn't, fine as well. You can do different things, right? It depends on other hands. For me, the dollar, ADQD. We'll see this ADQD. Okay. So the story is that you can enter here either limit or a confirmation. How do you get the confirmation? Same thing. So this is the time that the prices come here, right? So now at this time, 33.22, right? You see how prices are continue to go lower, right? But you see how the low was here and this thing was close to the low but not lower? That is a divergence. That's what I call the divergence. This is a very important part of my trading. This is a very important part of my trading and timing. Okay? And I'll tell you, you have the divergence, you have the dollar, and you have the right area, and sometimes it doesn't work. All right? So you need to be clear on this. Like, yeah, you're seeing it. You're seeing it. How come that I'm not sharing? I see it. Oh, I'm sorry. Probably my internet was lagging or something. do you guys see how this low and this is a higher low right here? You can barely notice it. But remember, this is a thing that is going to be a real time. If this candle opened up here and is above this level, you put the order in, period. If this goes below, right, most likely that it comes to minus 1,000 and is going to reject, because minus 1,000 is a level that it usually indicates exhaustion, and that is what you want to see. That is what you want to see. You don't want to trade this long when the ADQD is right here, right? No, that's no. Why? Because when it's in the upper part of the chart, remember, this is a cyclical chart. That's the wrong timing. You're here, and this thing might continue to the upside, right? It might continue to the upside, but most likely after get exhausted, it's going to come down, right? So you want to take a long when this thing is really exhausted to the downside, right? And you can adapt this to another time frames, and you can play with it, right? This is the best thing that I've ever this is the best way I've ever find to enhance my trading. Okay, and I've tried a lot of things, like indicators, no indicators, only the chart, with a tick, with the tick. This is the best way I've ever traded, right? So here it is. After we have the divergence here, we fill our order. Prices just spent here. Now here's another thing that you can do. After prices are in the zone, especially in the ES, that's why I like the NQ so much, because the NQ is a lot more volatile, and sometimes it doesn't do this, right? The NQ sometimes it just gets to the zone and it rejects to the upside, right? The ES is different. So I will have to adapt to the ES, right? Probably the rules for 1-to-1 and move my stop won't work at all on the ES. That's what we're going to test, okay? So if you see here, 1322, that's the first time that the zone came here. Now you have another opportunities to get in here. Like let's say you got this pushed down. This is 33, right? Look at where the 33 is, right? 1334, sorry. This candle opens up at 33.08. That means that this 1 minute candle closes at 34. So the 34 candle is right here. You see how even though this is making a new low within the zone, still this thing didn't make a new low? See that? Then you can put your order here, getting out of the zone. Okay? That's another way that you can take this tick chart. So I already know the divergence on the tick chart worked, at least for this one. We need to collect more data, trial and error, right? So here, tick chart divergent and close to the exhaustion level. In this case, minus 1,000 and plus 1,000. Have you ever traded bookmap? I haven't. I have a friend that trade icebergs and stuff, but it was very hard for me to read. On a trending day versus a ranging day, do you find the levels of exhaustions are different? Absolutely. So the tick chart might not get any exhaustion in a trending day, right? It's just slowly grinding up, and probably doesn't find any exhaustion. And we can see a trending day. Yesterday was a trending day, right? So let's see how the tick chart behaved. Now I'll confess this: trading days are not very good for me. Like if I don't jump into the trade, if I don't jump into the trend early, I need a good retracement, right? So That's one thing. That's an opportunity that I have to improve, is on trending days, right? All right, let's go to the real quick ADQD, and let's see. So this was 124. The way I like to see the ADQD is very simple. Higher highs, higher lows, it means long. Lower highs, lower lows, it means short. Okay. Now the positive number is very important for me. So there are two things that I look at. Where this thing is plus above the zero line or below the zero line. That's one statistic that I collect in my H1, right? Another statistic that I consider is coherence. What I mean by coherence is, if I want to go long, I want to see this thing making new highs, right? Like, is this coherent to the long side? Absolutely, right? It came down, it bounced back up, created a new high, higher low, higher high, lower high, higher low, higher high, higher low, higher high. So this coherence tells me that we might have some opportunity to the upside. Okay. So what time is this? If you guys see, this is this is 13. This is 1 in the afternoon. So 1 in the afternoon is right here. Right here. All right. Is this thing making higher lows, and this one right here, higher low? Now you have some choppy moments right here, but still, where the trend started here, right? When you actually break the trend, if you go this one, below this one, below this one, and actually below this one, okay? So so here for me the chart is coherent, right? You have this choppiness right here that is coming out of this area, okay? So I like to see these more like in the short term. I would say is on the positive numbers, right? And look, this is the ADQ. This is the AD. This is not the ADD. This is the SPD, meaning if you trade in the ES, right, you can get different data from different exchanges, right? This is coming out of stocks in NYSE, right? New York Stock Exchange. And you have different. If you have the ADSPD, so if you have the ADD, it might look similar, right? Actually, it does look similar, right? But what I like to, why I have an edge on this one, ADSPD, right, is that this one has 500 stocks, right? 500 company. So this indicator cannot go above 500, all right? So whereas the ADD has probably, I don't know, like 8,000 companies involved in that indicator, it's more broad, but since we're trading the ES, is the 500 largest company, this ADSPD is exclusively for the ES, whereas the ADD is the entire universe of company in New York Stock Exchange, right? So I like to use how I use the ADQD for the NASDAQ. I like to use ADSPD, right? And we can prove this later during the week and the following weeks when we're trading this, if this is giving me a good information or not. I find my hypothesis in this trading system is that ADSPD is going to work better because it has the limit of 500 companies. So if this thing is around 450, that means that the vast majority of the companies within the ES futures are going up. Okay. All right. I don't know if you follow me. ADHD. Actually, I was diagnosed with ADHD though. Oh my god. All right. So long story short, I collect two datas off of this, and is above zero line, is below the zero line, and if coherent. Coherent is creating higher highs and higher lows if I want to go long, and if I want to go short. I don't try to time this. You could, but I don't try to time, right? What I mean is, all right, which one is a good level, right? If you have a bunch of these highs right here being broken, so I would say here, right? And you would say, oh, this thing just came to the demand, but it's very subjective. Like I haven't found an edge. I still do it, but I'm collecting data. I'll show you on the edge one, right? How do I input this into my trading log, right? Clear about the ADQD. So I want ADSPD coherent, meaning higher highs, higher lows, higher highs and higher lows for longs, and lower highs and lower lows. Damn. For shorts. All right. Point. All right. And this is going to be a hypothesis 100%. And I want to see execution. Right? Risk and reward ratio minimum of, let's start conservative, 2-to-1. Okay, let's start conservative on 2-to-1. I don't care about size right now because we're gonna trade on sim, so I couldn't care less about size. I'm gonna test this with one contract. Okay, you guys have any question before we move on? Okay, you can screenshot this if you like. You can rewatch the recording if you want to do the same for your own, and you can do this for the DAO, the RTY, etc. Okay, it's just a matter of putting the work. Okay, I don't think we have time. We've been here for 2 hours already. I'm not gonna do a market replay. We won't have time. Now we will test this on sim during the week. Okay, I will come before market hours. I will mark the zones and we will have them there ready. Okay, I will have to rearrange my entire outlook here, my desktop, just to put the ES on top of the NQ. Okay, I'm not gonna do it Soccernatic because I think people like Stack and the majority of traders actually are in need of more trading psychology than trading techniques. Okay, trading techniques are important, but if you have a trading system that is profitable but you cannot execute properly, then you're screwed, because what matters if you have a profitable system? Ultimately you will screw the data. Okay, all right, so I'm gonna take 2 minutes, right? I'm gonna grab a bottle of water and go to the bathroom and I'll come back. Okay, just 2-minute break, just to refresh your mind. Okay, Stack, I'm gonna tell you, brother, I feel sorry about the Astros. Oh my god, I wanted so bad this guy to win. Altuve, I'm sorry, buddy. I hope they can win this World Series. I know. I'm coming back in 2 minutes, okay? Just grab a cup of coffee, have some sun, fresh air, come back ready, okay? All right, guys. I am back. So one of the main struggle for every trader is psychology, right? Execution. So you have different legs of your trading performance. Is your prime if your plan profitable, your risk management, and your psychology. But what is the psychology? What in reality is the psychology? Why your psychology is so important here, right? Any of you know why your psychology might be so important? Stack, I want you to be the moderator here. Like, I want you to reply every question. We are not robots. All right, but what if we have emotions? Okay. We have emotions, all that. But emotions won't disappear. Emotions won't disappear. So you always have them, right? So confidence, yeah, important. What else? But I'll tell you, before I thought that emotions were very detrimental, like they were affecting me, and they were actually. But I was interpreting them. Sorry about my English again. The wrong way, right? I was seeing my emotions like I need to shut them down and trade like a machine, right? And to some degree, that will help you. But it will be close to impossible to do that. Don't worry. Um, Now I want you to do this exercise stack because I hear that you're struggling big time and with your psychology. So there are three main legs on the trading plan: your profitable trading strategy, your risk management, and your psychology. But what involves the psychology? What is the important part about psychology, right? And people has put there about confidence, emotions, etc., right? So what do you think, Stack, that your psychology matters in trading? It's important to answer these questions, right? If you want to go deep and understand how trading works. Emotions are involuntary. The actions you take because of them is voluntary. Um, I agree and I disagree to a certain level, Socratic, because the brain's architecture is made up in a way that emotions overtake the rest of your making decision strength. Meaning, what I mean by this is when you're very emotional, you are 100% acting in a more reflexive way, right? You are not thinking clearly. You have very narrow focus and you are thinking that you need to get out of the problem right now. If someone breaks into your home to hurt your family, your first reaction will be just going in front of them and defend your family, right? So in that situation, you are acting reflective and you will do things that you're not capable to do with your um, conscious mind, right? Because conscious mind requires a lot of let me put the chat here so I can watch. Like conscious mind requires a lot of willpower, and willpower is finite, right? You can get out of willpower at some point, and you will. There you go, Ashley. That's the point that I wanted. That's the point. Your psychology affects your execution, right? Emotions are involved, and we know that they're not gonna disappear. So we're gonna have to work with them at some point. Like emotions are not gonna be zero. You will have them, right? So you need to include them. You cannot get rid of them, right? So that's not what I wanted. I wanted this. Your psychology affects your execution, Ashley. That's the right point. If you have a trading system, right, that is profitable, you need to execute in order for you to keep getting the same results, right? Because if you don't execute the right way, if you don't execute the right way, then all the data that you collected, quote unquote, on your trading, on your profitable trading system, won't be important. All right. Okay. So let's do this. Let's do this. I'm gonna ask another question, and I am getting all these out of this book and whatever Mike Douglas his workshop that is online. It's like 5 hours. And all right, so I want to ask you a question, guys and gals, if you're there. Have you ever played slot machine? Have you ever go to the casino? Answer. I need you to answer, Stack. All right. If you pull the lever on the slot machine and it doesn't pay you in that one, do you think like a loser? Honestly, you pulled the slot machine, you lost. Let me put my face here. Comments without chat. I know, but it's different when you put a trade, right? Why when you put a trade and you lose the trade, you feel like a loser? And let's stop right here. When you put a trade and you lose, there are a few things that are involved, right? And you feel like a loser for a few reasons. Number one, you name them. Your family has already tell you that trading is impossible to achieve. There you go. Because you have a lot of things on the line. It's not only the money. The money is one thing, but there is I'm gonna make it, I'm not gonna make it on the line. Is the money on the line? Is my wife is telling me to quit because I need to get a real job and make money instead of just keep losing money, right? All the friends that have tried and bailed out because they couldn't do the right thing, they just abandoned trading and they got a real job and they're happy now, and they were very unhappy while trading because they were just losing money. And you want to demonstrate them that you can make it, so your pride is on the line, your family is on the line, you need to support them. You lose the money, right? And you are not capable of putting a winning trade, right? Thank you, Wolf. Oh boy, welcome. So all those things are on the line in every single trade. In a flash, you get, oh my God, I'm not gonna make it. I've been doing this for a few years and this is so hard and I can't. Everything happens when you lose a trade, right? Why it doesn't happen when you pull the lever, right? Tell me, Stack. Thank you. Tell me, Stack, why when you put the lever on the slot machine and in the one single thing, why you don't feel like the real loser? Why? You guys need to come up with this answer. Why you when you're playing slot or you go to the casino and you lose, let's say $100. Let's assume you guys are not compulsive gamblers and have a mind problem, like your mind's sick, right? You are addicted to gambling. Let's say you went to the casino and you lost $100 or $200, right? And you leave the casino. You probably feel like, damn, I lost $200. But do you think yourself like a loser? You don't, right? But what's the reason? Good. Another answer. Stack, I want you to come with your own words. I need you to understand this. I know I'm grilling you, but that's fine. I think you will learn off of this. That's um there you go, Soccernatic. You got the point. When you press the lever, you know that the game is kind of rigged, right? That they need to profit off of your money. So you're not expecting to win every, every game in the lever or every blackjack hand, right? You know that the game is quote unquote rigged against you. So you, in some way, accept the outcome, right? So your expectation is not that you're going to win every trade. You got your sticker, Soccernatic. You got your sticker. Let me see if I can watch you guys so I can. Oh my God. Okay. So in the casino that the game is sort of rigged against you, right? So your expectation is not that you're gonna win every, hand in the blackjack or every slot, game. Eventually, if you hit the jackpot, then fine. But at the end of the day, you went to the casino. You're not a compulsive gambler. You just went there to pass some time, and if you just spend a couple $100, it's fine. You leave to your home and you feel okay. But in trading, it's not like that because you have expectations, right? So those expectations are the ones that you need to get rid of right now. How do you get rid of those expectations? And you can call it trade without emotions. I don't see how one person can trade without emotions. It's very hard. I bet probably a professional trader with years of experience probably won't feel anything, but what I have read out of books is that you will feel emotions every time. Okay? So I wanna see here. Give me 1 second. I'm gonna look into these 5 pillars. Where are the freaking 5 pillars? So I'm gonna have to go through this book. I have some marks here. I'm gonna go through them. No, I'm sorry guys, but I need a couple seconds here to find where are the 5 freaking pillars. There we go. Here it is. 5 fundamental truth in the markets and related to your skills. Okay? So how do you get this? This is page 130, chapter 8 of Trading in the Zone, right? Number 1, anything can happen. Okay? Anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. Okay? Number 3, there is a random distribution between wins and losses for any given set of variables that define the edge. And this is true not only for markets. Like, have you ever find yourself when let's say you went out once with one group of friends, and a year later or 2 years later, you guys want to repeat the same experience. You try to so bad to repeat the same experience because you had such a good experience that time that day that you guys get together again and you try to do it, and it's not the same. After 1 year or 2 years, it's not the same. Why? Because every moment in life is unique, and especially in markets, it's so hard so hard now. It's literally impossible to repeat two moments in the market in the same way. Like, this happened yesterday, it's gonna happen today, either today or in 2 weeks. Same chart, same conditions, dollar at the same level, tick and ADQD at the same levels, ES at the same level. It's impossible. You cannot repeat two scenarios. And why? Because for two scenarios to repeat, right, same conditions has to be made. Same number of orders, and I'm talking about the market now. Same number of orders, same number of buyers, same number of sellers, right? Same conditions. It's impossible. It's so random that the market is never the same. It will make you an awesome trader. I know it. The Long Game by Doris Clark. Yeah. I will look into it. Thank you, Pearson. Right. So you need to accept that the random distribution between wins and losses for any given set of variables are defined by an edge, right? Is the law of large numbers. If you try this 3 times, we just did one exercise, just one. And with that, we're going to create a hypothesis, a trading plan, and we're going to test it for the rest of the year. And let's see how the data talks. If we have an edge with that, then we can go to real money. If we don't have an edge, we have to do small tweaks until we find edge. Okay? 4. An edge is nothing more than indication of a higher probability of one thing happening over another, right? Oh, sorry about that. Like, the camera is crazy. The autofocus. So the edge is nothing else but putting probabilities on your side. Instead of you being the guy pulling the lever, you want to be the slot machine, right? How you're being the slot machine? All right, just executing your trades the best way you can, right? Putting probabilities in your side, and in some way getting the game rigged on your favor. Does the slot machine takes your money 100% of the time? It doesn't. Sometimes it gives you, right? Sometimes it pays you, but at the end of the day, probably not to you, but at the end of the month or 6 months of the quarter, that slot machine was profitable because it took more money out of clients than what it paid, right? So in the same way, we need to try to beat the casino this time. We need to create an edge and execute it the best way. So with the with the law of large number, we can be profitable, right? Now it's hard to do. Oh, yeah. I'm sorry, guys. This is sort of my birthday. I drank so much that I got dehydrated. So the fifth thing is every moment in the market is unique. Okay, those are the five truth to understand, so you can do the work in order to become a better trader, right? So The way Mark Douglas uh, puts it is, all right, you have a trading system, right? We already have a trading system. We created a trading plan based on what I do with the NQ. We want to translate that to the ES, okay? Does it work? We don't know. We are going to test it, okay? So how do you get rid of your emotions, right? Not get rid of your emotions. Sorry about that. It's not what I meant. How do you execute the best way you can so you understand your emotions, right? And the goal here is to trade not without emotions, but not to take action, not to get some reactive actions because of your emotions, right? So Mark Douglas says this. He says, all right, commit one amount of money. Like you can say, no, don't adjust your expectations right now. No, not really. Look. So you study this, you study the 5 truths about the markets and your execution, right? You got it. So you are trying to subconsciously put that in your mind so you get subconsciously competent, meaning you will execute regardless of where you're thinking. You don't think. You want to be reflective. You want to trade in a matter that you're not hesitating. And I am guilty of that as well. I've made some trades. I've made mistakes, but the more I do what I do, the better I become. And I hate to be the bearer of bad news, but there are 2 things that you need to put here: time and effort. It's not free. It's not free at all. You need to put time and effort for you to get better. So if you're not willing to invest your time and effort in trading, it's hard to make it. You need to spend good 2-3 hours on Saturday backtesting. You need to spend every day studying and getting better with the markets, okay? So if you think this is a thing, this is a job that you will do for 30 minutes and will cash in $10,000, probably after 20 years of hard work, okay? Like in everything, like singers, like lawyers, like any other profession. You put the work and then you harvest, right? Those fruits, okay? Yes, like reflective, but in the good way. There are 4 stages of competent or being competent, like subconsciously incompetent, consciously incompetent, subconsciously now how is it? Is subconsciously incompetent, consciously incompetent, consciously competent, and subconsciously competent. The main goal is to become consciously competent, meaning that you do the right thing in a reactive manner, meaning you read the market so fast because it's in your subconscious mind. You don't have to think too much. Yes. Subconsciously incompetent. Consciously incompetent. So, meaning you're screwing it up, but you're conscious of it. Then the main goal is to become subconsciously competent, meaning that you know the thing so hard. Like, have you find yourself doing some things. I don't know, probably you soccer fanatic, you play soccer, but you know how to shoot a penalty kick. It's so good. You just do it naturally, right? That's the main goal in every discipline, right? All right, but don't let's go back to the what Mark Douglas tells us is, all right, so first thing you got to do is understand that it'll take you time and effort, right? Number two is commit a certain amount of money, right? Let's say let's don't be too aggressive. Let's commit $1,000. If you have been trading for years and you're not able to do it, so committing $1,000 in probably 1 month or 15 days won't be very impactful for you, right? This is me, and I had to do it. I had to do it in the past. I had to just stop what I was doing and commit the time and the money so I could become a better trader, right? And for you to become a better trader, you need to center your focus, your attention in your trading process, not in your trading outcomes. Remember, every outcome is random. It's impossible for you to predict what is going to be the outcome on your next trade. None. Zero. It's impossible. Like the slot machine is matter of probabilities, right? So if your expectations are not adapted, you need to adapt them. So how do you become adapted? So you commit the time, the effort, and the money, right? And you say, I have this trading system, like the ES future. And I will test this on sim for the rest of the year. It's just 1 month or 2 months, right? And if it works, I will come next year and say, all right, I'm going to do this exercise. Can I execute flawlessly this plan? Well, let's see. I'm going to commit $1,000, right? And I'm going to lose $50 per trade. If I lose all 20 trades, right, then those $1,000 will be gone. But the probabilities of you losing, if you have an edge, right, you prove that on sim. The probabilities of you losing 20 trades in a row is very, very narrow, very small. The same as you winning the 20 trades. It's literally almost zero, right? So what you do is you commit this amount of money and your trading plan, and for 20 to 30 trades, you say you pick the amount. But I would say he says minimum 20. I would say probably more, but let's say minimum 20. Okay, and for 20 trades, if the conditions in your trading plan are met, right, you execute. Why it has to be with real money? Because you want to get ready mentally. Sim is one stage. You already got to that stage, right? You already proved that the trade plan is profitable. Your trading plan is profitable. Now, let's make it real. Let's execute that trading plan with your psychology. So you go ahead, your next trading trades, your next 20 trades, you execute them. You know that you already lost those $1,000. You can't have expectations. Those $1,000 are gone. It's just you proving to yourself that you can do it. Okay? And center your attention in the process, not the money. Why it has to be with real money and cannot be on sim? It has to be in real money because you will feel emotions. Probably in the trade from 0 to the 10th trade, you will feel certain emotions. But in that lapse, in that time, yes, in that time, you will evolve and you will see that some trades went to your target. And when you were expecting some trades not to work, but you put the order because the conditions were met. In this case, tick chart, dollar, ADD, all aligned. I have my zone. I need to execute, but I'm hesitating. I think the market is gonna fall, is gonna drop, and I'm buying. I don't want to, but you know that you have to because you're working in your process. You're not working in making $100 or 200 or 500. You're working in getting better. So you need to execute, right? And when you execute those trades, you will realize that some of them that you were expecting not to work, they work. And when they work, that's when your mind starts changing. That's when you start changing. And you say, damn, I really thought it was not going to work, but it did. And then you start to reshape your subconscious mind. And you will say, oh, this weird guy on the internet probably is right. Like, and it's not me, it's Mark Douglas and other experienced traders, right? And you start really modifying your subconscious mind regarding trading. Okay? It's not an overnight process. It's a thing that takes some time. So when you stop doing this thing, you executed your 20 trades. At the end of the day, and you have to develop metacognition. You have to start typing in a journal or writing in a journal and start paying attention of your thoughts, your emotions, and your actions. Those three. And a lot of meditations guru, they tell you if you visualize and you feel the emotion, the things will come. No, they're missing one thing. And what they're missing is the action part. I'm sorry, you guys, if you don't put the work, this won't work for you. So you need to visualize what is your future, feel the emotion that you actually are getting better, right? And take action, coherent action, right? If you miss the trade and you're chasing price, then your action is not aligned with what you want. If you miss the trade, write down, I missed the trade. These were the conditions. Next time these conditions are met, I will do the best I can to execute this trade. And if if it ends up being a loser, it's fine. Because five principles of market dynamic and consistency tells you that the outcome is 100% random. Yes, thought, emotion, and action. The action has to be coherent. There's no magic. I wish there were some magic, right? And to a certain degree, if you feel the emotion, you are loaded up with good chemicals, like your dopamine is good, so you feel and you feel good, and then you're able to wait for the right setup. You're not just, oh my God, struggling to put a trade. I don't see. No. You're patiently waiting for your trade, right? Because you know if the setup is not there, I mean, what's the point of risking my money, right? To put a low probability trade, right? All right. Yeah, keeping a journal is number one. So my takeaway from all this is there are techniques, there are ways to become a profitable trader, a consistently profitable trader, adapting your psychology to get better, but it takes some effort. It takes some work. It's not free, right? And I'm sorry, but human behavior are like the majority of human beings, including me, are wired just to have free things. And putting the effort, it has some cost. Probably time with your family, right? My family is just waiting for me to finish this, but I think I'm benefiting off of this life as much as you guys do. Okay? I think I won't stop learning, especially if I want to become a good profitable trader, in a sense that I can put 50, 100 contracts in the ES or the NQ and make tons of money. Am I there? No. It's going to be free? No. I need to put the right work, grow my psychology, so I can handle a loss of few $1,000s, which I'm not ready yet. Okay? Recording your trading is important. I've been recording my trades from probably more than 2.5 years. And I have some, the best of my data is those when I lost control of myself. And I have a bunch of tilted trading. It's sad, but I do keep those videos, me just trading very tilted. And I have the image of myself, and I have the image of myself trading tilted, and it is a huge learning experience. Yes. So let's wrap up this live stream. For those who haven't read this book, Mark Douglas has 5 hours of his workshop online. I think it's worth taking the time to listen, or if you want to find something, I think there are some summaries of those workshops, but the story goes like, commit the time, the money, and the effort. Invest in yourself, right? Yes, I did. I covered the setups. You can go back to the beginning and check my setups. So invest in yourself, time, effort, and money, assuming that you already have a profitable plan. And so when you stop and you go to your, when you stop doing this test, right? So when you know you're ready, when you know your subconscious mind is ready, so you go ahead, you tested that at the end of the 20 trades, let's say 20 or 30 trades, whatever, and you see, all right, did you make money, right? But that's not the important thing. The important thing is, did you trade well? Did you execute all trades? What do you feel while in the trade? Do you feel like you couldn't handle the emotions and you find yourself just doing things just to avoid the emotions, meaning not holding to your winners because you want to record the win. You don't want to wait for the target to get hit. Instead of that, you want to close a trade right now because you want to record the win. Okay? So all that, you put it in a journal, and you, at the end of the 20 trades or 30 trades, whatever the amount that you commit, and you see, all right, am I ready? And be truthful, like be sincere. Am I ready, or should I do it again? 20 more until I execute without thinking and overthinking. Don't think. That's the goal. Don't think. Be subconsciously competent. See the thing, execute. It's easier said than done. If you put the effort, the time, and the work, you will do it. Okay? I don't know if you guys have any question. I do. Thank you guys for being here. Spending the Saturday valuable time with your families and stuff just to watch me talking things. No, OBS is 100% free. I actually use I'm doing the live stream with OBS. You don't have to pay. But sometimes your computer puts a lot of resources to OBS. Screen nomad. Oh, cool. If you have another Expo Lane, if you have another program, fine. No, brother. Anytime, okay? Like I said, if I can help me helping you guys, it'll be a no-brainer for me, right? I do benefit off of these sessions. Yeah. All right, guys. Thank you for being here. I'll see you guys all 9:10 in the morning for on Monday, okay? Thank you guys. See you.